NBFCs, however, are in trouble, and they're in trouble because of variety of factors. Lending seems to be slowing down. ALM mismatches are split wide in the open. Prabodh Agarwal joins us, Group CFO with IIFL. Prabodh, good morning. Thank you for joining us. What has led to consolidated profits coming under pressure this time?
So our consolidated net profit for the group actually declined by 12% YOY for third quarter. Our IIFL Finance profits grew by 6% YOY, but profits for both wealth and securities declined on a YOY basis. Now coming to NBFC, our AUM has grown by 33% YOY, although it is flat Q on Q. Our cost of fund did go up by about 30 basis point Q on Q, but we were able to pass on these additional cost of funds to our customers, and therefore our margins are actually maintained at around 7%. Now last quarter for the NBFC, was about managing the liability side more than the asset side, and therefore, our focus was on managing the liabilities and reducing the share of short-term borrowing commercial paper, which we successfully brought down from 24% to 12% over the last one quarter. Having done that, now this quarter I would think there will be some growth that you would see. The growth should resume. On the wealth, your question was, what led to the sort of decline in profits YOY. So on wealth, basically again our AUM has grown nicely. Our AUM has grown by 25% YOY and 11% Q on Q to cross 1,60,000 crores, making us one of the largest wealth managers in India. But what we saw was that in the last quarter, the yields have come under pressure by about close to 20 basis point, both on the fee-based and the fund-based yield, and that led to lower income and lower profits. Part of that is because of the change of the inflow, where more inflows were seen on debt funds where the yields are lower compared to equity. And the second is that we migrated our customers to a new platform called IIFL One, where the fees are lower, but over time it will help us build the larger volumes. But we have to go through the transitionary phase. So these are the factors which led to the decline in profits for wealth.
Right. So for your third quarter share with us the performance of your NBFC business. Did you witness margin and asset quality pressure, and was there any slowdown that you witnessed in growth?
No, so margin we did not see any pressure because our net interest margins were maintained at around 7%. That is what we have been guiding for. So as I said, our cost of fund did go up, but we were able to pass on the additional cost of fund to our customers. So net our margins were maintained. The second question on asset quality did deteriorate, and our NPAs have gone up in the last quarter. Our gross NPAs were 3.7% versus 2.2% in the previous quarter, and our net NPAs were at 1.5% versus 1% in the previous quarter. So we saw some increase in NPAs in a few of our products, including construction finance and real estate, SME and commercial vehicle.
Meanwhile, tight liquidity scenario still continues with the recent SL Group DHFL concerns. Given this backdrop, will growth slow down the NBFC business and in specific really your call on asset quality and margins?
I would think, the thing is that last quarter was a quarter where we did not have any visibility on raising long-term resources. Most NBFCs were facing that problem, and therefore whatever long-term resources one could garner, one was using that to repay the short-term borrowings, the commercial paper, etc. That was the entire focus. Now the liquidity situation, I wouldn't say it is back to normal, but it is definitely better compared to the situation in end September or October. And also the fact that our lenders are much more reassured by the fact that we did not see any default by any of the NBFCs, and most NBFCs have been able to manage their commercial paper. As I said, we were able to halve our share of CPs, and that gives tremendous confidence to our lenders. So definitely we believe that the situation is better now. And
okay, thanks for that opinion on the growth which you are seeing overall, and thank you so much for joining us.